Good morning, one and all. Today we are going to discuss about generally accepted accounting principles. So this is the first unit of your accounting theory and analysis subject. So already we had discussed about accounting for price level changes, that is the third unit. But now I am doing about the first unit, that is generally accepted accounting principles. Okay. Before moving to GAAPs, we should know how this accounting journey, okay, how the accounting has been emerged, how the journey of accounting started. When we see a long years back, there is no a kind of a business setup, neither sole trading concern exists, nor partnership business, nor your joint stock companies. There are no these kind of business setups which are existed in the economy in the society. But later what happens, but at that point later what happens, these sole trading concerns, partnerships, joint stock companies, they emerged. Before their emergence, we had a form of economy, a form of a society where people used to collect the goods and services for their consumption. They go in search of those goods and services which they want, and they get that for their consumption. Later what happens, whenever they are not in a position to get those goods which they need, then the concept of barter system exists. Okay, barter system started where the people exchange goods for goods. Initially, when there is nothing like exchanging of any goods or items, there is no need of keeping the record of any transaction, because everything has been done by an individual for himself. But due to the emergence of this barter trade system, what happens, people started to exchange the goods for goods. If something is not there with them, then they exchange the goods which they have with those people who do not have the goods. So likewise, when barter system started its era, then they realized the importance of keeping the record of those goods which they had exchanged. They started to count. Okay, they actually started to count in terms of keeping stones, in terms of keeping writing it up on the trees and all. Like this type of counting actually begins. How many goods I had exchanged to someone, and how many goods I had received from someone. These sort of a things they started to record in terms of counting, and this counting gave a way for the development of accounting. Okay, so initially we do not have accounting system, we actually had counting system where an individual counts the transaction, they keep the record to themselves. Later, when the barter system started, then they realized the importance of selling the goods and services. Trading activity begins. No, at that point of a time, accounting emerged. So, think about your accounting journey. You can see here in this slide. Okay, so you can see here, initially we had a business units. Okay, these business units we had for what purpose? For a specific purpose. Okay, we do business only for a specific term and for specific task. That is how the business units runs initially. Then what happened, after they realized that once they done with a particular task, then they started to take one after another. One, they completes one task, then they take up the second one. Okay, like this they started to do the business, and then they started to accept two or more simultaneously. What it means, they started to do the business at a time of multiple kind of contracts they get into, and they started to do the business. Now we can see sole trading concerns, partnership firms and joint stock companies, they have perpetual existence, and the entities are different, and accounting we need to do for these sole trading concerns, partnership concerns and joint stock companies. See, initially business units were there which are run for a specific task and for a specific period. Then what happened, they realized the importance of doing the business, so they started to take one after another. After a certain point of a time, they started to take up the business simultaneously by running one or more businesses, and this all the things had given a way for the development of sole trading concerns, partnership firms, and joint stock companies, which we can see right now. These are all the companies, these are all having perpetual existence. That means they are artificial persons. So without any artificial persons which should be treated separately from those of owners. So this development of sole trading concerns, the development of partnership firms, and the development of joint stock companies gave a way for the development of accounting also. Okay. Okay, let us see the developments which we had in the field of corporate world. As you can see, nowadays the corporate is fully advanced. Right now, we are having in the society, in the economy, we are having a world which is full of corporates. Companies' existence is at a peak level. So initially, we had venture type of a business. Venture type of a business in the sense when one or two individuals come together to start up their business, jointly or individually, they start their business. But right now, we see huge number of joint stock companies. So the venture type of a business had now we can see joint stock companies. When we are talking about joint stock companies, it is a combination of more than two people. That means more than two, three, four, five, six. Like these many owners will be there associated with the joint stock companies. Huge number of owners will be there, and these owners they are not these few if there are few owners, then we can then what happens, you are supposed to communicate your business transaction to those few owners, but due to the emergence of joint stock companies, these few owners had transformed to many owners. Means there are large number of owners who are scattered throughout the world. So whoever the owners are there, no, they are not residing in a single place, they are not staying in a particular place, they actually scattered all over the world, they spread over the globe. So they can't handle the business. Moreover, they can't participate in the business activities as and when it is required. That leads to the creation of management teams. So as the owners are large in numbers, they are scattered all over the world. That leads to the creation of management teams. So the managerial personals came in to play a vital role in the running of a business. So these managerial personnel, what they do, they're going to convey the what is happening in the business. They're going to convey whatever the things which had happened in the company. They're going to convey the financial information to the users. Here, users in the sense to the owners. How the company is performing. Everything has to be communicated by these managerial people to the owners. So that's why these managerial personnel possess huge power to run the business. So when they have the power, they are not supposed to prepare the financial statements as they wish, isn't it? So they need to adhere to the rules and regulations. They need to follow the rules and regulations. Then they need to communicate all the financial information to the users who are spread across the world. So this changes in the business environment. So we can see the changes from venture to joint stock company, from few owners to many owners, and then the creation of management teams. These are the changes which we had witnessed in the business environment. This had created a responsibility of reporting. That means here the managerial personnel are responsible to report the information to the users of accounting. So hence how they're going to report the information? So by way of accounting. Hence the accounting has been developed as a part of business. Now business is nothing without accounting, we can say. So whatever the business transactions are there, no, that you need to communicate to the users. How you communicate? Through accounting only. Hence accounting has become a part of business. Through accounting only, you're going to prepare the financial reports, and those reports will be communicated to the external parties, which is known as a formal reporting system. So these are the developments which had happened in the corporate world. These developments leads to the development of accounting also. Okay, so this is about the developments. This is about the developments which had happened in the field of accounting. Okay. Okay, moving to the next concept, that is need for reporting. I said you accounting is nothing but communicating the financial information to the users. Okay, so why they need to communicate, why they need to report, why they need to convey the financial information? What is the need of reporting? So we will see here the need of reporting. First of all, they need to report for the purpose of separate entity, in the sense business has been treated separately than owners. Okay, owners are different, business is different. That is what we used to say as a separate entity. So when owners are different from the business, whatever had happened in the business should be reported to the owners, isn't it? So when business and owners are one and the same, then there is no need of reporting. But we follow the rule of separate entity. Separate entity tells business is separate, owners are separate. You can't merge business transactions and owners transaction in a single report. You need to show separately. You need to focus on only the business transactions which had happened in the company, and those business transactions should be communicated to the owners of the company. So that's why reporting is required. Reporting in the sense accounting information supply of accounting information we used to say as a reporting. So there is a need for reporting. Then major joint stock companies, came into force more and more. See, joint stock companies, we can see a large number in the economy. I said you, nowadays we can see huge number of joint stock companies because of various advantages associated with the joint stock companies. And one of such advantage is that whenever there is a profit, it will be shared among the owners. But at the same time, whenever there is a loss, that will again shared among the owners to mitigate the loss and to contribute the capital. These are all the few advantages which the joint stock companies possess. Because of these kind of advantages which are associated with the joint stock companies, nowadays what happening of many individuals come forward to start up the business in terms of companies. So initially we had sole trading concerns, we have partnership firms, but right now a huge number of joint stock companies have been emerged. And when we talk about joint stock companies, owners are large in numbers. When owners are large in numbers, you need to communicate the information about your company's performance to the owners. Hence there is a need for reporting. Clear? Moving to the next one, a large number of owners spread over the world. As I said you, joint stock companies are more. When joint stock companies are more, obviously the owners will be more in numbers. And these owners, they do not reside in a single place. They are actually spread across the world. So when they are spread across the world, you need to communicate them. How are you going to communicate? Is it possible to you to took all the vouchers, all the transactions together to each one of them, each one of their place? It's not possible. You need to report in a proper manner by recording all the transactions, by classifying and summarizing and giving a proper interpretation. You need to communicate information. So that's why there is a need for financial reporting. As the large number of owners are spread across the world, it is difficult to report to individual about the company. So there is a need for a proper format, that is reporting should be done about the company's performance. And finally, in order to fulfill the legal requirement in the sense, in our company we need to obey the rules and regulations framed by various authorities. It might be in tax authority, it might be in this one RTI authority, in Right to Information Act, that authority also seeks financial information. Like not only this, other political institutions also demand information about the company's performance, and in order to supply that required information, you need to do reporting. So when you prepare the reports, then only you can supply the required information to the legal authorities. So these are all the reasons why actually there is a need arised for reporting. Okay, so before knowing what exactly the generally accepted accounting principles are. Let me understand what accounting is. As you already know, accounting is nothing but it is a process, okay, where you're going to record the transactions which happen in the company. Those transactions will be classified and then will be summarized in a proper manner, and thereafter the result will be interpreted to the users. But the transactions should be of financial character. That is what we used to say as a accounting. So here you can see the definition which has been supplied by AICPA. So what they define accounting as an art of recording, classifying and summarizing in a significant manner and in terms of money the transactions and the events which are in part at least of a financial character and interpreting the results thereof. That means what accounting is. Accounting is nothing but it is an art. It is a way of recording the transactions. So which kind of a transactions you are going to record here? Yes, the money transactions. Okay, so the transactions which are of financial character. Okay, so the transactions which are of financial character will be recorded, will be classified. How you classify? By following the accounting rule. Then will be summarized. Why you need to summarize? In order to give proper interpretation of all these results to the users. If you do all these activity, then we used to say it as accounting. Next definition, you can see here accounting, it is a service activity. Why accounting has been called as a service activity? Because it serves the users, okay? It serves the users. Accounting going to serve the users. There are multiple users who are there, need accounting information. This accounting fulfill their need, hence it is called as a service activity. Its function is to provide, supply quantitative information. Which information they supply? They supply quantitative information. So quantitative information in the sense the numerical information. In accounting we can see only numerical data, right? So the numbers we can see, money information we can see. That is what accounting do. It supplies quantitative information which is of financial nature, financial character. Okay, so why they supply quantitative information? They supply quantitative information in order to make economic decisions. Okay, economic decisions in the sense fruitful decisions. Whether it is an owner of the company, whether it is a management of a company, whether the employees of the company, everybody need accounting information. Why they need accounting information? To take up financial decisions, economic decisions regarding their activities. So that's why accounting has been called as a service activity. It serves the users and helps the users in taking economic decisions. So we have financial accounting, we have management accounting, we have cost accounting, like we have three main branches. See here, we have branches of accounting. So we have financial accounting, then we have cost accounting, and then we have management accounting. Basically, financial accounting is actually required by the external people, okay, whereas cost accounting and management accounting are demanded by the internal parties. So let us see what financial accounting is, what it does, and what is cost accounting, what it does, and what is management accounting and what it does. Moving to financial accounting. So financial accounting basically refers to a form of accounting which will prepare general purpose reports which will help the persons who are external to a firm. So financial accounting is a form of accounting which prepares information which is of financial information will be supplied to whom? To the external of the firm, external to a firm. So a business means internal parties will be there, external parties will be there. Financial accounting serves the need of external parties of a firm. Okay, so financial accounting, it is nothing but it is a kind of accounting which provides information to take decision who are outside the firm is called financial accounting. So you had seen in financial accounting what we do. We prepare P&L account, we prepare balance sheet, we prepare notes to account, we prepare statement of cash flow, we prepare balance sheet with that is statement of financial position at the beginning of the year as well as end of the year. Why we prepare all these financial statements? Only for the purpose of providing financial information to the users. And here financial accounting serves whom? The users are more outsiders to the firm. Okay, so financial accounting is a form of accounting which prepares accounting, which draft accounting information which is of financial in nature and serves such a financial data to the outsiders of the firm. So that we used to say as a financial accounting. Moving to cost accounting. See, before understanding what cost accounting is, you should know what is costing. Then you can concentrate on cost accounting. Then we move to cost accountancy. So costing, as the name itself is indicating, it is just a process of identifying the cost or determining the cost. So costing is a method how a company is going to determine the cost. That is what we used to say as a costing. Say a company is manufacturing a toy. How much cost that the company had incurred in manufacturing that toy? That is what we used to say as a costing. Okay. Here a company going to ascertain the cost of goods either or of services. So what about the cost accounting? So in costing we see only the determination of cost associated with the goods or services. But in a cost accounting, what we do, we going to account for the cost. We're going to record the cost transactions. We're going to we are not only record the transactions but also we establish the relationship between cost centers and the cost units. Cost centers and cost units are nothing but those responsible centers, those centers which are responsible for the cost of goods. It might be in purchase center, it might be in sales center, it might be in production center, whoever may be. Okay, so cost accounting, what it does, it is a process of accounting for cost from the point at which the expenditure incurred to its ultimate relationship with the cost centers and cost units. So cost accounting, what it does, it going to record, it going to account for the cost which has been incurred at the beginning to its disposal to the cost centers and the cost units. That recording of entire cost factor is termed as cost accounting. What about the cost accountancy? So cost accountancy is the application of both costing and cost accounting. It is the application of both costing and cost accounting principles, methods and the techniques. Why they apply this? In order to control and ascertain the profitability. So what they're going to control? They're going to control the cost. So in cost accountancy, what we do? We not only determine the cost, we not only account the cost, apart from that we control the cost and then we ascertain the profitability. So such a process we used to say as a cost accountancy. So this cost accounting is actually required by whom? By the managerial personnel. Why they need to take managerial decisions? So this is what we used to say as a cost accounting. Moving to management accounting. So the name itself is telling management. Whom this accounting is required? This is basically required by the managerial personnel. Okay, so management accounting, here also we can see two splits. Accounting means all the financial transactions we account, but we account in such a way which will be helpful to the managerial personnel. That is what we used to say as management accounting. Okay, so in management accounting, what we do, here we're going to present accounting information in such a way which will be helpful to the management in creation of day-to-day business operations. In a sense, management accounting is a form of accounting where accounting information is supplied to the managers, uh, which will be helpful in creating the policies. Okay, which will be helpful in doing their day-to-day business operations. That is what we used to say as management accounting. Here also accounting information will be there, but the only thing is here the accounting information will be supplied in such a way which will be helpful to the managers to take managerial decisions. So management accounting, we can also term it as it is an accounting method, the techniques and the systems which will be useful in imparting the knowledge, which will be helpful in supplying the information to the management for the purpose of maximizing the profit and minimizing the losses. See, why we need separately management accounting when we have financial accounting? Cost accounting is different. Okay, so in cost accounting, what we do, we determine the cost, so cost accounting is required. But in financial accounting, we determine the financial performance and we supply that information. But in management accounting, it have both the costing data as well as financial data. But what is the need of having this one? Because see, when we speak about management, the board of directors, do you think that the board of directors are from commerce background? They might be from science background, they might be from arts background, and whatever the financial information you had supplied, no, they may not understand it. So that's why management accounting, what it does, it conveys that financial information, costing information, everything to the managerial personnel in such a way which will help the managerials to take the decisions regarding management activity, like maximizing the profit and minimizing the losses. So we have budgets, we have budgetary control, we have ratio analysis. Those are all the techniques of management accounting. So with those techniques only, we're going to supply the information to the managerial personnel. Then see here, management accounting, it is a collection and analysis and interpretation of accounting information. Here also accounting information will be collected, recorded, interpreted, but that will be done in such a way which will be helpful to the management. That is what we used to say as a management accounting. So one more definition you can see here, management accounting is concerned with the accounting information which is useful to the manager. So here the prime focus of supplying the managerial information is whom? To the management. That is what management accounting does. After understanding the various branches of accounting, let us understand accounting as a language of business. See, generally I am speaking, I am communicating with you by means of a language, right? I am talking with you in an English language. English is what? It is a language through which I am communicating with you, through which I am speaking to you, right? So without language, is it possible to me to convey the information? Is it possible to me to communicate with you? It's not possible. So only with the existence of language we can communicate, we can supply the information, isn't it? So if we have errors in language, if we are not having proper punctuations, proper placing of words, then it will distort the main aim of communication. See here just one punctuation which is here in the first statement, don't hang him, what it does, it means hang him actually, because of this punctuation. If you are supposing, if you are telling that you are not going to hang that individual, but you are putting full stop after don't, which means don't is separate, hang him separate. So hang him, which means you are going to hang. So like this, even a single punctuations will harm the meaning of the sentence in normal case. Likewise in business, what is the language through which how we communicate is through only accounting. So accounting has been considered as a language of business. Without accounting, we are not possible to communicate about anything of a business. Okay, we can't communicate anything about the business. So if the business is performing well, if you say verbally business is performing well, no one believes that. They need evidence, and evidence, that means backed by the accountant, certified by the accountant, and accountant certifies what? Accounts. That means these chartered accountants are the they're going to certify this your they're going to certify the accounts. So once they certify the accounts, then only will be auditors will certify the accounts. Once the auditors certify the account, then only the accounts will be taken considered as a valid one, right? So accounting is only the language through which business speaks, how business is performing. If a manager of a company tells business is performing well, no one believes him until unless he had the evidence backed by his statement. And the evidences are the financial reports, and the financial reports are how they prepared, by following accounting only. That's why accounting has been called as a language of business. Here we have stakeholders, right? Stakeholders means we have shareholders, we have employees, we have trade unions, we have many people who have interest in the company's affairs. Okay, stakeholders we have, and we had a company's performance. We need to inform to the stakeholders, isn't it? We need to tell the company, to the stakeholders, how the company is performing. How we tell? Only through accounting. So through accounting only we prepare financial reports. Okay, we prepare financial reports, and when we prepare financial reports, we follow the rules of accounting. Okay, so rules of accounting will be followed. So hence accounting has been called as a language of business. Without accounting, we are not possible to communicate the business transactions. Okay, so if you want to communicate the business transaction, then obviously you are supposed to you are supposed to use accounting. Okay, so hence we used to say as accounting a information system. Okay, moving. See here, accounting as a language of business. Uh, Through accounting only business entities speak. Okay, hence accounting has been considered as a language of business. As like any other languages, they have their own grammar, they have their own punctuations and all. In the same way, accounting also had its own grammar, where we have rules for journalization, where we have rules for posting to ledger, where we have rules for preparation of trial balances and financial statements, where we have standards which tells us how to deal with a particular accounting, how to do particular transaction, how to treat a particular transaction. We have generally accepted accounting principles. We have companies law, that is Companies Act 2013, which gives various definitions regarding various aspects. These are all we used to say as a grammar for language of accounting. Without these language, that our accounting is useless, we can say. Next, once accounting, we saw accounting as a language of business. Now we are moving to accounting as information system. So when we say something as information system, there should be three things. One is input, another thing is process, and the next thing is output. So when input is processed in a proper manner, we will get output. So this process of obtaining input, processing the input and giving output in the form of result has been termed as an information system. Why accounting has been considered as an information system? What is the reason behind considering accounting as an information system? Because accounting does the same. Accounting, what it does? Accounting basically, it processes the inputs. So business transactions are the inputs. These business transactions will be processed in order to prepare financial reports, output. So hence accounting has been considered as an information system. So the major the major objective of financial statement is to provide information which is useful to the present as well as prospective investors, creditors and other users. So who may be the investors, who may be the creditors, who may be anyone, okay, in order to take economic decision. Such a financial information will be supplied through accounting only by processing the inputs. Hence, accounting has been termed as accounting information system. Okay. See here, you can clearly get an idea about why accounting has been termed as an information system. Why means inputs are there which are processed, and then the output has been produced which will be finally supplied. See here, we have inputs. Inputs means in a business we had huge business transactions. Many kind of events will take place like purchase, sales, expenses will be there, wages payment, salaries payment, incomes loss, everything will happen. So it doesn't happen in a single way. It happens in a often basis, frequent basis. So all these raw data should be processed properly. How the processing will done? They're going to record the transaction. They're going to classify them, analyze them based on the rules which are prevailing. Once the analysis had been done, then such a information will going to be supplied. Clear? So here this once the processing done, finally you will get the output. So output, how they get the output? Output will be in terms of financial statements and reports. So we will have statement of P&L account, statement of financial position at the beginning and end, that is balance sheet, then statement of cash flow and notes to report. Like these are all the outputs which will be supplied to the users, okay, in order to take good financial decisions. So this entire process we used to say as accounting information system, because it process the input to get the output. Okay, so that's why accounting has been called as an information system. Like external parties with a direct financial stake and indirect financial stake. Direct financial stake antandre they are actually have direct interest in the financial matters of the company. Shareholders anta tagoli. Shareholders, they want to know about the company's performance only for the sake of money. Whether they get their dividend, whether they get their capital back, they whatever the investments they have made, no, for that purpose they need accounting information. These shareholders actually, we can say shareholders are the owners of the company. They need financial information in order to take decisions. Owner, these shareholders may be the prospective shareholders are the present shareholders. They need this. These shareholders need accounting information for the purpose of taking financial decisions, like whether to invest or to take back their shares. So when the company supplies accounting information, their shareholders get to know how the company is performing. What is their company maximizing their profit? Is the company maximizing their wealth? Okay, based on that, shareholders will take decisions whether to invest or not. So that's why shareholders need accounting information. What about the debenture holders? Even debenture holders also want accounting information to take decisions, okay, whether to lend the loan or not, whether to purchase the debentures or not. So usually these debenture holders need a regular interest on a particular time. So they want interest on a particular time. If the company is not performing well, obviously debenture holders are not, they won't go for purchasing the debentures of that company. So how they get to know whether the company is performing well or not? Obviously by seeing the accounting information which has been supplied by the company. Next, suppliers of input. So suppliers of input in the sense the creditors, like inputs means raw materials. Okay, in order to take up production activity, obviously the inputs are very much essential. See, without raw material you can't even produce the goods. Okay, so such a inputs will be supplied by the suppliers on a credit basis. Okay, if they had supplied you on the credit basis, obviously they look into your accounting information in order to know whether you are capable to repay their credit amount, repay the credit amount. Otherwise they won't give you on a credit basis. If the company is not performing, then they won't go for supplying the goods on a credit basis. Likewise, we have financial institutions. So these financial institutions, they lend money to the business. Okay, if the company is performing well, if the company's performance is good and profit is there, the company is in maximizing their wealth of the company, then obviously financial institutions go for lending, otherwise they won't. Likewise, employees. Why employees need accounting information? With the accounting information, employees get to know whether the company is doing profit, earning profit, or facing losses. If the company is earning profit, then obviously the share of the profit will be given to the employees in terms of salaries, wages, then perks, in the sense a bonus, commissions, everything will be paid to them. If in case the company is in terms of losses, they are facing the losses, okay, what happens then? There is a possibility of not getting even the regular salary on time. So that's why employees are actually, they are worried about their money, right? So they want to get the salary on time because of huge commitments they have on their part. So when they have accounting information which will help the employees to decide whether to stay with the company or to quit the company and look for other companies. So that is the one more use of accounting information to the external parties. Okay, so we had discussed about these external parties. Now I am doing about now we will move to users with the indirect financial stakes. Why these people need accounting information? What is the use of accounting information for these people? See, customers. Why customers need accounting information? What is the use of accounting information to the customers? Basically, customers are usually attached to the product. That means they are addicted to the goods and services which are supplied by some company. Suppose a company is there. This company is manufacturing one kind of a product, say for example ink products has been supplied by a company. So customers, if they are addicted to these products which have been supplied by a company, then they want this company's ink only for their use. If all of a sudden a company gets shut down, if the company exit the market, if they shut down their business, they stop production of the business, then the customers won't get the ink which they had addicted. So that's why customers want to know how the company is performing. So that's why they need accounting information. In case the company's performance is downward and the company is facing huge losses over the years and the performance is very dull, at that point of a time customers can make an arrangement for substitute, for alternatives for the products which have been supplied by particular company. So that's why customers, they do need accounting information. Likewise, we have tax authorities. See, tax authorities, why they need accounting information? Being a tax authorities, obviously they want to know the income generated by the company because they want to charge tax. To collect tax, obviously accounting information is very much required by the tax authorities. Then what about the financial analyst? So financial analyst and the advisors, they are nothing but they analyze the financial performance of the company in order to give ratings. Okay, we have CRISIL, we have ICRA. These are the rating agencies which rate the company's performance. We have credit rating agencies, okay, which going to rate the company's performance, credit worthiness, whether they are capable to repay the loans which they have borrowed. Everything they rate the company by giving grades, A grade, like A plus, like they give points and ratings. So how they give points and ratings? When they get to know the performance of the company. And how they get to know about the performance of the company? Only through accounting information supplied to them. Finally, we have brokers and other financial intermediaries. So usually an individual, common people, public, they want to invest in the company. If they are not that much familiar with the stock market, they go for brokers, and brokers will help them to invest in particular company where their shares will be safe and they get regular returns. And these brokers, in order to assist the public regarding investments and all, they need to know the company's performance, hence they need accounting information. And finally, we have and the next one is we have trade unions. Trade unions means we can say that the competitors, other people who are also running the same sort of a business, these trade unions also want to know the company's performance, their pricing policies, their goods and the demand for the goods, the profitability, everything they want to know, the credibility of the company, everything they want to know. So they need accounting information. Then the press. in order to communicate the inform about the company's performance to the general public at large. So the press, the media also need accounting information. At the same time, general public means common people, public who are there in the society, they also want accounting information. If in general public, if we take about the students need accounting information, right? Likewise, the research scholars, they might need accounting information. Teaching faculty, they might need accounting information. And the purpose of those general public differs from one to another. So these are all the users and uses of accounting information here. So this is your today's class. So today we discussed about the accounting, how the accounting journey started, and why there is a need for accounting and reporting, how reporting will be done, what are all the branches of accounting we have, accounting, why it has been called as a language of business, why accounting has been called as an information system, and who are all the users of accounting information, and what are all the uses of accounting information. So in the next class we go the remaining aspects.